Always, welcome back.
Hello everyone.
Yeah, and also welcome back, Kenji. Yeah, it's good to see you again. No, I think like you are like a Kitti official backup right now, you know.
I think both of us, our names start with K. So maybe I think simply because I'm Langsai.
I guess maybe it's the later because she's attracted to Langzai or shortcut and shortcuts. So, or we sometimes we call it leveraging, you know. So shortcut leveraging. She always when you see Langzai, she think of shortcut, then she use for that. So talking about averaging, right? Actually, it could be quite a big topic on the investment, right? And also sounds like a very dangerous word for me in the personal financial planning perspective, right?
Okay, so we talk about leverage. Let me ask you, if let's say someone talk about leverage in investment, what would you think of?
What I can think of would be borrow money to invest, margin.
Something like if you invest in the stock market, then it will be margin.
Yes.
But actually, for in my perspective, leveraging in investment is actually depends on what kind of investment you are putting in. So let me give an example. Actually, I think everyone, not everyone, most of the people, especially Chinese, our parents, they are leveraging on certain investment. You know what is it?
Children?
No, it's property.
Property.
You are borrowing money from a bank and invest on the property, right? This is a leveraging too.
Yeah, true, right? If there's a choice to buy cash.
But we wouldn't think that leveraging on property, borrow money from a bank and buy property is a very risky. We think that this is the very, less risky compared with other investment without leverage.
True enough, fair enough. Maybe because I think property is something like we can feel or we can see, that means we can even touch it, right? So we feel like it's maybe thinking that, that is a less risky, and we think that the leveraging is okay, this is acceptable. Maybe that's why we sometimes we have something like a bit, not say negative, sometimes we think of the leveraging as a dangerous move, right? But on the personal finance perspective, right? So is averaging, we take it as something good or something acceptable?
Actually, most of the time, for investment in, let's say, any investment tools other than property, I wouldn't recommend that leveraging on the investment tool because it is very risky. It may burn up your capital if, let's say, we are not experienced enough in the market. So even though myself, if I want to leverage, I think I will not risk more than 10% of my capital.
You sound
the maximum.
You sound conservative to me. But anyhow, I think personal finance really needs to come hand in hand with the investment itself, because we will discuss more in the later. Investment is something I think it's quite hard to run away for us in nowadays, and no matter if it's a low risk or high risk investment, it's more on our choice to choose it, right? Like you say, how we control, we limit the leveraging we are using. And I'm also actually happy to have you with me here for today to talk about this topic on this week, and we're going to drill even deeper next week, right?
Yeah.
In the next few shows.
Yeah. Actually, I'm excited about sharing the next couple of shows with you, and then I would like to give more values to our wellbeing.
So jealous. Kitti have holiday for so few more shows. Okay. Now my cool. Okay, I have a new experience with you. So, how does investment help with personal finance? Could be a very huge topic, right? So, where will be the best place for us to start with?
I think we start from the most easiest one. Okay, how about looking at one of the most common thing people have and have a look at the effectiveness of supporting personal finance.
Money in the milk tin, under the bed.
I think this one is maybe back to 30 years ago. People still
You make me
practice it.
sound so old school. Great. I think you're talking about FT. Then maybe let's us have a look on the FT itself. So I think this is something a lot of people have over here. So our question will be first to look into, is this sufficient to just go with FT in nowadays?
FDs I think especially this year, everyone will experience that the inflation is very significant. Right, the price of getting the goods, grocery around us is this year is very obvious. The price.
Yeah. I remember in the news, official news, I always hear 6 to 7% for the whole year. In actual case, my wanton mee actually have increased 10% for twice already, and sounds like
definitely. But this is actually because maybe the official announced that the inflation rate is maybe 6% or 7%. This is based on the raw goods, like let's say sugar or flour, and but the things different things that have different inflation now. I can say that.
Did FT have anything to do with our inflation?
Oh yeah, because if let's say someone is only putting their money in the FT, everyone knows that FT compared with the old days, FT right now is about giving us not more than 2%. But our inflation is definitely higher than the FT.
Yeah, we have a summary today, I think, on the FT versus the inflation, right? Yeah, I like your side. Looks very green, right? From the data, green is the FT rate we have, and then the red one is the inflation rate. In the time you have on about 1980s, right? FT we are talking about 7-8%, 5, 6, 7, 8%, right? It looks very good.
Yeah,
it's quite promising, right? FT.
Actually, in my memory, based on my memory, when I working that time, started to work that time, I think the FT is about not more than 4%, 3 to 4%. So I guess it should be around.
I mean your age is
2001,
around
3.
here.
So I think everyone can guess how old I am right now.
I'm looking at this, I think, wow, I will take this part as a wholesale. You see, you do nothing you need to do, and then your FT is beating your inflation, which means you just close your eyes, put every cent safe in the bank, you might able to outbeat your inflation, right?
Yeah, true.
But that is not happening after 2007.
Yeah.
Looking at that, you see, it looks like FT no longer have the magic. Chinese said the 魅力没有了. Already.
Especially, these 2 years after COVID, the interest rate decrease is same to our FT law. So I think the FT is maintaining at not more than 2%, it's more than 2 years already. It's about 2 years. I think since 2020.
So what would be the impact if we keep on having the FT lower than our inflation rate?
This impact, it will be getting obvious if let's say the time period is longer. So let's say if someone is only putting their money in the FT, so their money, they grow about 2% per year, but then the inflation is, let's say, 5%. So which means that in short, your money is depreciated about 3% per year.
Oh, okay. Which means
that this year maybe you can buy, you use 10,000, you can buy one luxury bag. Next year, maybe you can buy a mini version.
I see.
Maybe 5 years later.
Sounds like 10,000, 8,000. Now I can buy an iPhone. If I put FT, I may end up with a Nokia. So it sounds like that's why we talk about investment may able to outbeat the investment, right? That's why we're always thinking that investment that may be able to outbeat the inflation, right? And save us something on getting something better on the lifestyle, right? So if that is the case, right? So how do we can actually start our investment?
Okay, actually, before we start our investment, we should actually have to set aside.
So you know what is that? When we say investment, we start to like the heartbeat kencang already. Kencang already. Tuk 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 tuk.
Yeah, so actually in my opinion, you have to set aside what is your goal first. Let's say what is your why you want, first of all you have to ask yourself why you want to invest. Is it you want to retire earlier, or you want to save for some purpose? Let's say maybe you save for your children education, or you save for, you want to travel around the world. So after you set aside your goal, then you have to see how long is the time period. So as long as the longer the period, then the investment tool you can expose to higher risk. But let's say if this money you want to buy house on half year later, then you cannot invest on something that is very risky. But in fact, this kind of money you have to put for a safer investment. Example is our FD lah.
Oh, okay. How about bond? Bond also considered kind of stable, right, for short term itself.
Yeah, bond is actually kind of medium to low risk investment. But I would actually recommend that if you want to put for bond, it's better to invest for at least 2 years. That it will be safer, right? Because sometimes our bond is not performing that good.
Okay, so in the very short term, talking about less than 2 years, maybe we have to really think about just using FD, and with this, we have to see our money shrinking. So bond, we are talking about 3 to 5% range right nowadays.
Yeah.
And always, for your information, I attended a briefing this week only. So one of the bankers is talking about break down the bond for the retail investor like us to do it. Guess what is the minimum amount to buy one bond right now? They said make it affordable. It's 250,000.
Yes. For bond investment.
Is it affordable? For general Malaysia. Okay, but I think there's also always there's a way talking about bond also. Just a high level mention about it. We can always opt for some bond fund in the market through unit trust. Even we're going to talk a very deep in about unit trust on next week, right? So we're talking about bond also. We can always look for some unit trust. You can see the performance. That is also a way for us to use it. I mean, to protect our wealth. I will use the protect, which means that we make sure it is not growing lower than our inflation rate, right?
Yeah. Actually, why we want to invest is because as long as our wealth, our asset is grow, can outrun the inflation. That is already good enough for us.
How about I got a friend, I already talked to her about investment. I tell her, why not you invest on the thing? I told her that you invest on certain thing and that. Then she said, okay, I can let you invest for me lah. So I was happy that I was trying to set goal for her. I said, so before you start to know what is your goal for this investment, so she's willing to put in a couple of hundred per month. And you know what is the answer I get from her?
What is the answer?
She said, actually, I don't really have a goal on that. What I need, right? Actually, I just want to make sure that my money grow higher than FD only. So in that case, is the goal setting considered relevant anymore?
I would say that she can actually treat it as a forced saving for herself until she can find a goal that she wants to achieve. Because in later part we will talk about when should we start to invest. So this will explain. Even though you don't have any goal, you don't know what you're going to plan for incoming future, you still can continue to proceed your investment journey.
Yeah. I do agree with you. I was going to tell her, maybe look at what is her passion right now. Some people maybe just want to work on some of the passion project, helping others, taking care of the kids full time. That will support her in the long run for the maybe 10 years, 15 years later on her early retirement, right? Which I think is good and valid. But when talk about investment also, right? Chinese said, if we're talking about bond, talking about FD, Cantonese said, mo yok se, there's been no meat to eat. There's been the investment, right? Very little return. But if we are going to for the higher than the FD, right? So is it risky to invest?
Okay.
Or the second question I think is the most important. Any sure win investment tool?
Actually, I got two answers for this. Sure win investment. First of all is you can invest, or I wouldn't say it's invest, but you can save your money in EPF. Yeah, because EPF set a rules, right? For our EPF dividend return per annum, it must be at least 2.5%. Cannot be less than that. Yeah, so based on our past experience, the past performance for EPF return is around 5.5 to 6%. Example, this year is 6.1%. Is actually hit is actually beyond our expectation.
Okay.
Then what is the second answer?
So for the first one, I think I need to clarify something for our Huawei's here. When he said about EPF 2.5% return, actually there's a quarantine term in the EPF itself. When they first set up, it was saying no matter how bad, which we hope not, EPF perform right, the government going to fork out minimum 2.5% return for the EPF safer members itself. So there's the EPF 2.5% minimum return, and this is, I mean, makes it clear, this is only applicable for the conventional account and not applicable for the Sharia account, because I think this is for my limited knowledge, I think this is not compliance to the riba requirement. That's why I cannot set the limit over there. That's what I think. So, and then for the EPF itself, for those working, you have contributing on that. But actually for those, if you are not having a permanent job, right, or you have your own job itself or your own business, you can always contribute on yourself. I think maximum per year is 30,000, 60,000. I need to check the figure.
I think it's 60,000, if not mistaken. And furthermore, those self-employed, they can go for tax relief if they save money into the EPF.
Okay. Then how about on the, you said about there's a second Sure-win method.
One.
I like the Sure-win.
I think this one we should invest in our brain, invest in knowledge.
Invest our knowledge.
This one is definitely, I don't know Huawei's or other people, but I think for myself, invest in knowledge, invest in myself. Invest it definitely help me to grow further and grow bigger.
Invest in knowledge, that's mean I buy the whole encyclopedia, put at the book rack.
That one,
investment.
That one is invest time. Money is not big, because the book is not big.
Also knowledge.
Not expensive, but the time spent is a lot.
Encyclopedia, I think quite expensive nowadays. Not easy to find. So when you're talking about knowledge, I think you're talking about attending course, getting a new knowledge about financial or whatever, right?
Yeah.
But a lot of people, some people, right, sorry to say, some people I know learn a new term recently, they call cert collector. They will attend all the courses and have the cert collector, but the knowledge itself is with them, but they never use. Would be a Sure-win in that case.
You have to be selective. You have to, before you actually want to commit into any courses, you have to really do your homework first. You have to study first before and consider first. You really need to commit into the course, or you can find for the free information online, because a lot of information you can find on YouTube right now.
Yeah, that would be free. That knowledge car investment is invest time for knowledge.
Even though Huawei share a lot of information and knowledge.
Actually, I also cert collector. I also got a lot of weird cert you don't imagine it. How about now suddenly something come to my mind. Now there's one of the number forecast company in Malaysia. They're hitting 80 over million payout, right? Would there be a interesting investment?
What is the investment?
The gambling, the number forecast company.
Number forecast. Okay.
With a bird over there, 80 over million.
Okay, what's the question again?
So is it worth for the investment? I mean,
okay.
2 ringgit for 80 over million return, right? I cannot imagine how much is the percentage.
Okay, let me ask you, you think that retailer like us buy the investment product earn more or the company that sell this product earn more?
So I think honestly, if I buy the company share, I'm an investor. If I am buying the ticket, I guess I am the gambler.
Yeah, actually, this one, I think most of the people already know that in probability, this is actually favor to the company. But then if let's say this is for entertainment, it's okay. But sometimes people is crazy about it, put in a lot of money. It's definitely in long term is guaranteed lose lah.
Yeah. It's in favor of the house. The probability always in favor of the house.
Yeah.
But I guess you, one thing I did have before I become a financial planner. Actually, I was an engineer before, so engineers like to use number, right? Actually, I got an engineering manager teach me on how to when we should try to have some fun with this kind of thing, right? Like for this one, 58 number, right? You know what is the probability to win?
To win the
jackpot, the grand prize?
I think it's 1 or 10 million.
No, 1 of 40 million.
40 million, I think okay lah, quite near lah.
1 of 40 million, and now you have to bet minimum 2 ringgit. So that means you should look for a return which is 80 million. So you can try to have some fun with it when the jackpot amount hit more than 80 million. If not, forget about that. It's not justified for the return.
Yeah, true.
So a part of this kind of investment, anything else we can think about, or any investment that we can do?
Okay.
Other than the sure win, I know knowledge is a sure win, but when it comes to dollar and cent, I cannot eat the book, right? So that is something cannot.
Actually, okay, if let's say while we still have experience in investment, whether in unit trust or share market, definitely example during this kind of moment is I think is making loss. But okay, for investment, we cannot expect the return in short term, let's say 1 to 2 years. But if let's say you for the long term, let's say 5 years or 10 years, we can is higher probability of winning in the inflation. But if let's say short term is similar to gambling, but because we couldn't expect, we couldn't know that, we couldn't forecast when the market is open, the market is going up or down. Yeah. So we need to give the investment more time to get a return.
I got a question from our viewer. So even we're going to talk very deep in the unit trust next show, but I think we worth to answer this question. It's a very good question to me. Hello, can I ask if mutual funds investment EPF is better or just leave it in EPF?
Okay, this one for me, it will depends on. I will see what is your age first. If let's say you are going to retire, let's say if you are 53, in 2 years time you can get your retirement fund. So in this short of time, I wouldn't recommend you to go into the EPF investment. But then if let's say you are just 20 to 30 or before 45, is the period is more than 10 years. So I actually will suggest you can take a portion of your EPF money, go into your EPF investment. Because the time period is more than 10 years, the probability of getting higher return than the EPF return is much higher. Especially right now, everything is in discount.
I hear the music for the signal for the games. But before that, I want to talk about this question also on the whether it's good to stay in EPF. Actually, I have a new realizations on this month itself. I would say in this month. That's how I talk to my client also. What happened was EPF payout this year is 6.1%. No doubt, this is extremely good to me as our era is considered very good.
Yeah.
And then looking at a lot of the unit trust performance right now, right? Honestly, negative 10 to 15% is quite common if you bought it 3 to 4 months ago. If you bought it 2 years ago, likely you are still making a profit. If you buy 10 years ago, if you're at the right fund, you might still averagely getting 6, 7, 8 to 10% also have. But it will be very painful, you know, when you have a negative 10% in 3 months, the other side giving you 6%, right? So on and off, and what realization I have, right, I'm not sure applicable to you or not, Brenda, because our risk appetite is different. But what I normally tell my client now, I will see whether you agree or not. If you are willing to take a higher risk on the equity fund, feel free, just take it, you can invest with your EPF, because from the data I look at, 10 years with a right fund, you can 6, 7, 8% is quite okay consistently. But you are talking about, I want to be more conservative, I buy some balanced funds, I buy some mixed fund, right? Return averagely for 10 years, I saw about 3, 4, 5, 6%. To me, honestly, I would tell my friend, my client, not worth it. Because you take the EPF out, in 10 years you are getting 6%, you still have to pay me 3% commissions, right? You are making a loss some of it. So as well, you just keep in the EPF. But if you are willing to take a higher risk, right? So for the, like you said, for the longer term of 10, 20 years, right, I would support that, honestly.
Actually, I did research on the EPF approved fund before. So I just take the top 5 EPF recommended fund. So I look at the result for the past 5 years, top 5 EPF recommended fund. So the average return for this top 5 fund, they are giving about 11% for past 5 months. Not 5 months, sorry, 5 years. So if let's say you can diversify your EPF investment into different funds, so it's actually in overall it still can perform better than our EPF dividend, but in long run.
Okay.
This is the keywords, in long run.
So overall, I will say before we go to the tips, I will say actually EPF team is doing a great job on supporting, on growing the fund and giving us dividend for these years. So if you are willing to take extra risk and taking the potential return, right, this is always your own consideration. For them, I'm really satisfied with the return I'm with them at the moment. So how about we go for the tips of the day, then after we have some games and come back to answer some other questions.
Okay.
Also, yes, go for the tips.
Tips.
Hey, it's a yellow screen. Okay, quite nice. Now it's yellowish. Ong, Chinese say Ong, Chinese New Year, Ong Lai. So you know what is the game about today?
I totally no idea.
I tell you, normally games, right, they give me a structure, like they tell me what's going on or never tell me at all. But today they just tell me something. I show you a picture.
Okay.
Both of you, between you and me. Okay, I changed the script, sorry. The producer will show us a picture. You only actually, you have to tell whether this is something is an investment or not. If this is why it's investment, if not, then why you don't think it's an investment?
Okay.
Yeah.
Okay.
So I think we can wait for some questions on some picture to be around, maybe on top of us, on our tummy. What is this?
What is this?
I think this eyesight testing. Yellow in a yellow. Oh, jewelry.
Jewelry.
Oh, gold. Is this an investment?
Jewelries.
I put my hand in.
Jewelry. Jewelries I think most of us know that jewelries don't have much second-hand value unless it is gold. But if it's diamond or silver, the second-hand value is not there. But if you really want to look for invest in jewelry, or I would say it's metal, I prefer to invest in gold. It's definitely more valuable when you want to get a better resale price.
I see. To me, I look at this one, right? I see this would be a good investment, right? You know how?
Invest to your girlfriend.
No, you see who owns this bunch of gold. If she or she got more, right, make him be your boyfriend or girlfriend. They would be a better investment. But for the jewelry itself, I agree with you. Depreciating is one thing, and the outdated design also another thing.
And the cost of making this jewelry.
Cost of, you know one thing, when you take the jewelry out from the shop, right, you go back tomorrow, before you use it, immediately 30% off.
Yeah.
I thought this is a bag.
I know.
Whether this is investment or not.
This is the bag. Well, this one is. I have to make sure my wife not listening to this talk.
Then
This bag actually, I used to think that luxury bag is not an investment. It's a luxury spending lah. But I think in some certain cases, I'm not sure. I didn't research into the luxury bag. I think some limited bag, they are okay to invest. Let's say if you buy this bag and you collect, but you never use it up.
Yes.
From time to time it will have a higher resale price.
Yes. This is linked back to what you said. Invest in your knowledge. I do have friend told me that she said on certain bags, certain design, certain material, so precise, you know, and you keep it for certain years, right? Normally it can appreciate. Sometimes can even double. Whether the appreciation percentage justify or not, I didn't check because I asked her. So you invest or not? She said no. I buy and use. No, my friends so rich. They said I just buy and use only. I didn't keep.
Buy and use and sell it at a buy price, or?
Maybe no. You know, you buy and use, you carry out, and you get a rich husband. Also a good investment on the back, right? But I would say this is something. To me, right? This, I would say if you have the knowledge to keep and to resell it, maybe it's a good to use it as an investment. But this is not something in the mainstream investment itself. And when you spend money, may be good. What I said when you spend money, right? Touch wood, I'm not cursing anyone. If there's any burglary case happen, right? This bag is very easy to be carried, and the investment will go on within seconds.
Yeah, they will use your bag and carry the cash and Forex, put it in this bag and carry it together.
And worse, that is worse will happen. So I mean, you have extra, it's okay to invest. If not, then just use it. Buy it, and yes, a luxury item to use would be good. So, wow, diamond.
Actually, diamond. I think got one movie got tell this story about diamond. Diamond is actually some company, some people that how to say they want to tell this story that diamond is very precious, and then they actually have a lot of stock. There are a lot of diamond behind, but they just sell a bit to make the diamond go up. So that's why actually today that's why the diamond price is so expensive. So is diamond a good investment? Definitely not. This is actually same to jewelry.
Why I love, right? I was just recall I used a lot of diamond in my first job. Because in semiconductor there's a process called dicing, right? Our bag is made from diamond. The blade. So because it's hard enough to cut off the wafer. But to me, I don't think this is investment also. Why? Is it only a good investment for one time only? The diamond that you bought to propose to your girlfriend and make her your wife is the only investment is worth it. Because to me, in the history itself, right, if talking about precious metal, right, even gold or silver, right, they've been used as a exchange value before, like a currency before. But diamond never happened on this before. So it's more like a decoration item itself. It's not really can invest unless you have a very unique diamond. There's only one in the world. That is a different story. If not, then it's just a common consumer item for me. Call your agent. Hello. I think antique would be good.
Antique, well, this one I never do any research on this antique before, but I think this is similar to collectibles.
Yes.
Luxury collectibles.
Yes,
like paint, drawing, what else? Luxury watch, Rolex, things like that. This is more like collectibles.
You make me recall that if you are interested to buy and sell antique, right? Because antique would be something is quite unique, right? When something is unique in the world, they don't have a reference for the pricing. So when someone like it, you can give you 10 times, 100 times more than what you bought. If no one like it, you can worth just the price that you sell to the uncle that in the scrap metal over there. So it also depends how many people like it itself.
Depends on the demand.
If you really want to have antique collections, maybe something in my mind, right? Collect some new coins for your, not for your son, right? For your chuchu or grandchildren. Because I remember we got a 50 cents, Malaysia got a 50 cent once there's a brand new, never used, right? They sell for a couple of thousand, the 50 cent.
50 cents.
150 cents is very unique one, but you can keep that. I mean, for your chuchu or chuchu, then okay lah. Your grandchildren, then maybe you can worth it. You buy for it also the same thing to me, unless you have a lot of cash. If not, maybe nothing. Forex,
Forex.
Investment.
Forex is an investment. Wait, by the way, Forex in Malaysia for retailer like us, we cannot invest in Forex.
Yes.
You are like premium banking, or I'm not sure.
I'm not sure I can do it now because officially Forex is not allowed in Malaysia. We are not allowed to do Forex itself. Whether it's an investment or not, I will actually a lot of things talking about derivative or Forex, whatever we're talking about trading, right? I have to take one. So if you are the one that do your study, do your you have your knowledge, you have your strategy on that, like you have your technical analysis, you have your enter and exit, and you know the market change on all those things. That might be some investment or high risk investment trading work, because you don't call that investment, we call that trading. Some trading activities you are running. If you are just the one here, the auntie say, okay, there's a war happening, USD may be appreciate, you go and buy some and keep, right? For sure that is gambling for me, right? Yeah, I think this is quite clear. Depends how you're going in on that one. So I think the time is almost up. I'm not sure we have one more or we are going to end this game. This is interesting. Bear and the Bull.
Bear and the Bull. This is not considered investment, or we are referring to the stock market.
You know why they call why the stock market drop because of bear, when stock market rally it going bull or not?
I don't know why.
You don't know, right? I tell you. Look at these two animals. Okay, before that, I would say bear and bull, we wouldn't talk about investment. But if you talk about share market, right, I would say if you are, there is definitely investment. If your attitude is right, your objective is right on the share market itself, which means you are looking for long-term investment, you have your strategy right, even trading, that is an investment on your money. So to me, it is investment. Why the thing, right? Someone told me, right, you know how a bull attack or not?
How bull attack?
And then the attack or protect himself.
They just rush into the enemy.
No, it will go down and push you up. So there's a bull going up. How is a bear attack?
They from top and then.
Yeah, you go down and crawl down. So that's why they call it a bear. This is a story I hear about why there's a bull and bear. Okay, I think time's up. So I think, is there any winner or whatever in the thing? No, our producer said no, nothing. They said okay, answering some question. Okay, fine. I think in that case we go for the tips. Second, print on the t-shirt also good. Yes, get tips of the day, then we can go back to our discussion. Hello Dennis, I saw Dennis down here. Hi, came in late. Hi, you guys talk about crypto trading. Are you guys talk about crypto trading? We can talk about that after we go back to the question Brenda asked before we go for grant. Because Brenda just now was talking about her EPF investment average about 6% return. So what do you take on this one? What your take on this? She said my EPF return is 6%. The message, I realized my investment in mutual fund via the EPF, the return is higher than 6% WAR.
So your investment in ETF is high. Investment in mutual fund is higher than ETF. Yeah, actually in long run, mutual fund can outperform ETF return. But let's say if you are buying maybe few months back or 1 year back, most of the people will be making losses.
Yeah, I would take it in this way, right? Depends on your horizon on the EPF. You say more than 6%, actually quite hard for me to charge. You're talking about 6.3%, 6.9%, 7, 8, 9, 10, or even 12% on that itself. If let's say you have something 7, 8% throughout, averaging annualized for your investment, that will be quite good investment, I would say. Your agent did a good job arranging a good portfolio for you, outbidding the reference that we want, which is good. And another thing you might have a look is on the whether your unit trust return, right, is consistent or not. Inconsistent or not, it's like certain years it go up negative, positive 20%, then negative 30%, positive 40%. So if there's a lot of fluctuation, right, then you might need to check and think about whether you need to have something more stable or you want to stay in this a high volatility investment or not. Because you will hit a point that during your retirement year, right, you'll be fantastic if you're going up 40% of the year you need the money. But it will be a nightmare if on the negative 30% of the year, right?
Yeah, true. So actually, for my suggestion, so let's say right now you are 35, you can actually take a portion of money, invest into the mutual fund in the EPF. But you can, until you reach a certain age, example 50 or 52 or 53, if you think that the market is very expensive right now, it's time for you to take profit your investment in a mutual fund and go back to your retirement EPF. So this one is to secure your EPF money to avoid the big movement in case when you are retired, suddenly market crash.
Yeah, yes.
This is my opinion.
Yes, I would say it is true. So because they are, as I said, EPF doing a great job. Their return is quite consistent in the range that quite predictable. You won't see a large frustration on that. So what you need to do is actually, I would say, get your financial planner, get your agent to calculate for you for the withdrawal. Let's say after your retirement for the 30 years, let's say you estimate yourself to live until 90 years old or 80 years old, 20 years, with the return of 5%, right, is sufficient for you to stay for 20 years withdrawal for you from the amount. If there is sufficient, there's not a requirement for you to go for higher risk. You just stay as is, unless you have a dream to build it higher. That's different.
Yeah.
Actually, about this, the next question just now also lead us to the next discussion topic. What do I invest in? She was talking about crypto trading. What you think about that?
Okay, for crypto trading, it's actually good if you can allocate some portion of your asset, but like for myself, I'm not allocate more than 15 or 20% of my money into crypto. It actually depends on how much risk you can absorb. I'm actually a more riskier person, so I can put more money into the crypto. But some people, they are more conservative, but you feel like you want to try on crypto, you fear of missing out, then maybe you can put, let's say, 3% of your money into the crypto. Let's say crypto crash 50%. In your portfolio, you just lose about 1.5%. It's acceptable.
Okay. So to me, honestly, this one I had to quote one of my sifu. His name is Ivan. So my sifu did told me many years ago, 4-5 years ago, when we have a discussion about crypto. So we have a look on that quite long ago, and then for the crypto itself, his advice to me, which I always tell my friend also, crypto is something very new in the market. Even though now not considered not very new, but still considered a new technology. On the governance portion of it, in the government acceptance of it, we are still unsure of it. But looking at it, crypto might have a future in the status in the future itself. So invest with the amount that you are willing to lose all.
Yeah, true.
We're willing to lose all because why? Because look like crypto is here to stay. The question, the biggest billion question is, which coin is going to stay? It may be Bitcoin, it may be Ethereum, it may be none of these coins itself. It may be the coin that's going to stay like it's not yet being introduced to the market at all.
It may be Dogecoin.
No one know about that. Dogecoin also up down like drastically. So no one know which one going to stay. So if we are saying something like you want to try it, so do your study, pick the right coin itself, right? Then you may try to do some trading itself, more on technical part. Okay, buy sell. That is not much concern. You are talking about I am very investor. I buy and keep. I would say Chinese said 鱼用撒网, which means you put your net out to try to catch more fish. Just buy a bit here and there and do your study. Because some of the crypto itself really may not have value because they don't have the limit. When things does not have a limit, right? Like, the one we breathe in, can you sell for money? Because it's limitless, so you cannot sell for money.
Yeah.
But some is possible, right? So do your study and also, I would say, just focus on that and don't put your heavy investment portion into that itself because I still not sure what is the one mainstay.
Yeah, the reason why we want to make sure that the money we put in we can afford to lose because when the market is volatile, our mood, if you put a lot of money into the crypto, your mood will get swing. Market crash 死咯，咁啊，瞓唔到，食唔到。But let's say if you invest 1,000, if crypto crash 50%, just 500 okay lah. I put more money in.
Denise, before we go to the question about NFT, Denise said, so crypto very high risk. I just tell you what is my experience. I think I invested about 1,000 USD in the crypto, and the portfolio was shrink to about 200 plus USD. And at one point after that, it's rebound to 4,000 over, close to 5,000 USD. Or anything happened in about 2-3 years time. And what I did, I sell 1,000 USD worth of coin, keep back my capital. So I got 2,000-3,000 left there, fluctuate and wait up. So for me, it's a high risk or not. Definitely, I will put it. For myself, I put it as a high risk category.
Yeah, I think crypto is considered as like the top high risk. The risk is a top the big risk level.
How about NFT? They talk about NFT itself. Brenda and also Denise. Do you study on NFT?
NFT is totally another level compared with crypto. For NFT, I didn't study much. I didn't buy any NFT.
Honestly, I do start to do some study about NFT, but I haven't do any move on it yet. Right now, I would say this is very much on my own personal opinion right now, because I don't have much market research data to support me. What is my take on NFT right now? To me, NFT product is look like this art piece we discussed during the game or the antique. So when there's a demand, when people like about it, so the price may high, it can go very expensive. That's why always we can see that in the news that whoever come up with an NFT picture selling for millions dollar about that. So, but NFT is talking about trading. I bought it 1 million. If we are willing to buy it for 1.2 million, I have a 200,000 profit. If you are not interested anymore, or the fella or the picture, the owner suddenly has some bad news coming down, the price dive to the north, right? To just say half 500,000, I think losing half of it. So for my take in NFT at the moment, right, I would rather to create NFT than buy NFT. Because when I create it, right, so people push my thing up, right, it's just benefiting me more. Later they have to worry whether the price is still going to appreciate or not. How this trading work. But I still going frank on that one. I still in the very early research stage to understand more about this technology on that. Because now everyone going in, right, so a bit worry also. Hopefully the study bring me to a clearer picture and not a kiasu mood.
Yeah, for NFT, I think need to do a lot of homework because maybe we heard a lot of NFT success story, earn a lot, but I think there's a lot of people losing money in NFT as well. They just didn't tell the story.
Go back to the gambling discussion just now. The winner, someone going to win the jackpot, no matter 80 over million, 100 million or 200 million, I don't know. Someone going to win and he's going to make the headlines. So today is being broadcast into the news, just like MST. The success story is being published to the news.
Yeah.
But the multi-millions other Malaysia who bought that didn't hit it, no one will care.
Yeah,
So
yeah.
NFT also may be the same, right? So because the good news, everything putting it out worldwide, having a success story, it become a very hot on that. So we just need to take more care on that and need to study more. So apart from NFT, anything else you think we can? We talk about crypto. I think our Huawei's here, right, look like quite high risk sticker, you know.
I think okay, most common one, I think everyone already know lah. Unit trust of share is very common. But I think right now the new thing to our Malaysian example, crypto and NFT. And one more thing I would suggest is maybe you can look for ETF.
ETF.
You know what is ETF?
Exchange traded fund.
Yeah.
What is it?
ETF, exchange traded fund, is similar to unit trust. It's like a basket of a share. It depends on what industry you want to focus on. But then unit trust is more actively managed by a fund manager. They will just do a buy and sell, do the trading to manage this particular fund. But ETF is passively managed. Let's say we take an example, US top 500. There's an ETF fund so-called SPY 500. So this one is to the US top 500 stock in this ETF, and then the top 500 biggest capital, biggest cap. So they will just eliminate the bad company and bring in the good company. So this is the ETF, and this is the differences with the unit trust.
Yeah. I think let me use some jargon word. So sounds I'm okay, good. So ETF we call it the closed-ended fund. But mutual fund we call it open-ended fund, because why closed-ended? That means the ETF amount, right, they issue already fixed. While for the mutual fund, right, they call open-ended, which means the provider, the fund house, can always cancel and issue a new fund based on their limit. So what is the main difference is for the ETF, because it's a closed-ended fund, right? So ETF normally, typically you can trade it or buy it from the exchange, like Malaysia be KLSE Stock Exchange. US you have go to the New York Stock Exchange to buy the ETF on that. So what is the thing would be they would have some effect on the supply and demand. So when there's a demand on the ETF itself, right, the price may going higher than their net value, what they're worth. If not, it may go down if the demand is less. But for mutual fund, they maybe not have that effect, because anything based on the value of the fund itself. And I think we can talk more about the ETF and mutual fund on our next show. We talk about unit trust the time. And also only one reminder on the ETF for now. If you can't wait until the next show and already want to start to buy tomorrow, right? Take care and take precaution. Be extra careful when picking your ETF. Malaysia not that bad. I think Malaysia quite okay. In US market, it tend to have a lot of the leverage ETF, right? There can be leverage on a lot of funny things, right? That may be purely gambling for me. So you really need to pick the right one for you, because there can be a leverage 100 times, 50 times, 200 times, some kind of ETF like that. So just be cautious when you pick your ETF in other market. For Malaysia, I think overall our authority doing is quite well, controlling is quite good. So you can do your study on that also. Then, how about on when we should start to invest? After we talk about what to invest in.
Okay, when do I begin to invest?
Maybe hold on, before we talk about when to invest, since I think Denise and also Brenda and some of the Huawei talk about have some question about on the ETF and the unit trust side. You may type in some question, right, on the next show, any area about unit trust or the ETF you want us to focus or not. So if there is, we will try to have that focus on that topic itself, right? Okay, back to this question. When do we start invest at this time?
Okay, when do I start invest? Usually I would say that you should start invest by today. Why? Why today? They say, today it was so expensive for want to buy. actually you can buy a small portion into the investment first. Why? Because if you are not using your own money, your own hard-earned money, and put it into the market, you wouldn't feel anything.
Well, there would be a big lesson.
You have to put in, let's say, first, just now we already mentioned that put in the amount of money you can afford to lose. Let's say you just put 1,000 on to try. Is it this market? How is the market trend? What is the pattern of the graph? You just put in a small portion of your money, and then when the market go up, you just leave it there. But when the market is go down, you have to be ready to buy in at a cheaper price. So the best way is you have to consistently force yourself to force saving, consistently put it into the money, and then let your money do their job, and then let them to grow into the next level.
I would say that when to start, right, the earliest the possible, because I think there's always a saying that the magic formula in the investment is actually compound interest.
Yeah. True.
Why the earliest the possible? You see, if you are start investing on the 5 years old or 10 years old, right, you are live until 90 years old, you got 80 years for the compound interest to kick in. If let's say you are starting invest on the 50 years old, you still got 30 years for the compounding effect to take. Even the person said he start at the 89 years old, right? If you go for some conservative one, right, at least still got a few extra percent to earn. So there's nothing as the when is the best time. I always think the best time is the earliest the possible, and let the magic, the compound interest do their job itself over there.
Because I know a lot of people, when they just started to invest, they are very conservative. They put more money into the bond or fixed income fund, but slowly they will try to allocate some money into the equity fund, and then after that they will allocate some into the crypto. So the risk appetite is you need some time to train your risk appetite to get bigger.
True. Since we talk about on the compound interest, on the return on the investment, maybe on the next show, if there's I think in the next show we try to show our wowbies, right, any effective way for us to calculate the return on their investment or not. So like how to the easiest way to calculate the compound interest, because if you ask a financial planner like us, right, I will tell you to make I looks good, right, I tell you, okay, we use a time value of money formula, FV equal to what, interest to what, N equal to what. Actually there's something to look good only. I have a crack with a simple formula, simple calculator in our phone. We can calculate 30 years compound interest within seconds. So maybe we can share it on the next week, because our time is limited to that. So I think we are also pushing to the end of the day already, so we can discuss more about that. And also saw the topic bring up by the Denise just now. So we're going to, I will need to do some study about that also, ETF. Honestly, I don't go a lot in the ETF directly. I do more on the unit trust, but I do know how the ETF is it. And quietly, I do options for ETF. Since I think actually we got a lot of things we always want to share our wowbies, especially the calculation part, right? So, but I think there's always not enough time for us to share, right? So how about we share that there's something brewing between us, that especially for our wowbies.
Okay.
Right. Okay, let's continue.
Okay. So actually, okay. So there's always a lot of things to share, and we just find time is actually limited and insufficient for tonight. So as well as it's hard to do some calculation here.
So that's why, okay, I found something. GT cricket will auto turn off. Interesting. That's why we think there's a lot in calculations or some of the template that I think we can share with our wowbies, but sometimes it's not good to do it so openly, and we don't have a communication to check that whether they get it right or not. because when we talk about a money dollar and cents, it should be very dangerous if you key in something like inflation rate 3%, return 5%, you put it reverse, inflation rate 5%, return 3%, it will be totally different outcome. So we would like to talk to our wowies more, right? That's why and guide them more on this. We have, Kenji and I actually have prepared 2 Zoom sections, right, where we can do more and talk more openly about all this topic itself. So we're going to focus as a start on the cash flow management itself, cash flow planning, and also the insurance planning. Why insurance planning? Actually, a lot of time, right? Sometimes a lot of people have overthink that insurance or over-insure on that. So we would want to guide everyone that how we can pick the right amount of investment, amount of insurance for ourselves, right?
Yeah, correct. So basically, the Zoom section is we will just share more info about personal financial planning, and then talk into the depth into how to manage your cash flow, your debt, your insurance, and your investment or your retirement. So it's like a simplified of a full financial planning.
Okay. What will you call that?
We call it personal financial planning value section. Yeah. So for those who want to join us, you can register your interest in the Google form provided in the chat.
Yes, we're going to put the link to the chat. So you just show us the just register for your interest, and we're going to contact you on this 2-hour session for that. So before we go and closing up, let's have a look on the action of the day, a wow action for the day for our wowies. Okay, time really flies, Initially, I thought we only have a few questions. I was thinking whether is this sufficient for 60 minutes. Actually, we have not enough time again.
Actually, we have something we couldn't cover.
Yeah, actually, to me, today's topic, what is the meaningful for me a lot is the investment already becomes something, honestly, to me, something we cannot run away. I use the word run away because no matter what we do, right, even FD, you take it as a low risk saving, right? Entirely, you also consider investment because obviously bank is taking our money to rent it to someone else, then they can pay it to us. So we also investing on the trust only. And then if the inflation rate is getting higher and higher, especially right now, right? And honestly, on the past 10 years, I don't see often that FD able to beat the inflation, right? So I having a more concern. I'm thinking that we should start to think about investment. So you may not want to have a 10-20% of high risk investment. Maybe at least start with something that objective to break the inflation in the market, 5%, 6% on something on that, and learn about that. What is the range of returns or product you have with this return in mind? So at least you start with something, right? Rather than seeing your money shrinking every day. So I think there's a saying, $1 today, if worth less $1 tomorrow. So don't let that happen to you.
Yeah, actually, if let's say we invest our money, definitely our money are exposed to some certain of risk. But if let's say we are not investing our money, we still have some risk. Our money still exposed to certain risk. I take an example. First of all, the first thing is inflation risk. This we couldn't run away. And second thing, another example is let's say in future in Malaysia we have war with some other country. Then our currency will go down. This is a currency risk that we are exposing to. So you imagine that definitely in Russia there are some people they are very conservative. They don't want to invest. But after the war has happened, their value of their currency is dropped about 50% compared with US dollar. So this is a risk you are exposing to if you are not investing and putting all your money into a same basket, which is maybe Malaysian ringgit or any other this is
yeah.
a risk lah.
Which means that one is on the systematic risk also.
Yeah.
That is more on the systematic risk, also on the currency risk itself. Okay, next, I think we already overshoot by a few minutes. So for the next show, it's very obvious that we are going to talk about unit trust and ETF, which we just newly decided to add in, and how to evaluate the performance of it. And then the next show is going to, when is the show going to happen?
The next show is on 6th of April, same time, 8:30 p.m. So you remember to join us and hit the like button whether you're on Facebook or YouTube.
Yeah, you can always find us Wisdom of Wealth in both channel, Facebook or YouTube. So if you are on YouTube, just like and follow our page. If you are on the in Facebook, you just like and follow our page. If you are in YouTube, you subscribe to our channel and turn on the notification. And I think Taiwan names call it translation when 打开你的小铃铛 so that you will know anytime that we have something new for you. And then thank you very much and join us on the 6th April 8:30. And always remember that we always say that it is never too early or too late to start. The key is to
begin your wealth journey now.
Yeah. Bye bye, Bobby. See you all 2 weeks later, 6th of April. Bye bye, Bobby. Bye bye, Denise. Bye, Brenda. Bye, Angelica Ling.